17th December, marked by a broad-based sell-off across sectors like auto, financials, metal, and oil and gas. Sensex dropped 1,064.12 points, or 1.30%, to close at 80,684.45. During the day, it fell as much as 1,136.37 points to touch 80,612.20. Nifty declined 332.25 points, or 1.35%, to settle at 24,336. The markets were heavily impacted by profit booking, weak global cues, and investor caution ahead of the US Federal Reserve's interest rate decision scheduled for 18th December. All sectoral indices closed in the red, with auto, bank, energy, metal, and oil and gas sectors declining by about 1% each. BSE Midcap and Smallcap indices dropped 0.5% each. Top losers on the Nifty included Shriram Finance, Bharti Airtel, Grasim Industries, Hero Motocorp, and JSW Steel, while top gainers were ITC and Cipla. Despite the overall bearish sentiment, more than 270 stocks on the BSE hit their 52-week highs, including notable names like Oberoi Realty, Max Healthcare, Keynes Technologies, Indian Hotels, Coforge, Persistent Systems, and Dixon Technologies. On the technical analysis front, a long red candle was formed on the daily chart, erasing Friday's gains, reflecting market weakness and the inability to sustain an upside bounce. The support zone lies between 24,200 and 24,000. Holding above this level could lead to a rebound, while breaking below it may intensify selling pressure. The resistance level is at 24,500, with immediate resistance at 25,200. The 100 daily exponential moving average at 24,360 has been breached, signaling weakness. The relative strength index has crossed below its average line, indicating bearish momentum. A harami pattern observed on the daily time frame points to rising bearish bets. Nifty is consolidating between 24,180 and 24,860, and a breakout on either side will determine its next direction. If the index sustains above 24,200, investors may adopt a buy on dips strategy, but a breach below 24,180 could trigger a decline to 23,800 to 23,900. Several factors are driving the market decline. Firstly, investors are cautious ahead of the Fed's 18th December meeting, where a 25 basis points rate cut is expected. Markets are also watching Fed Chair Jerome Powell's commentary for future guidance, as a hawkish tone could negatively impact sentiment. Secondly, the Indian rupee hit an all-time low of 84.9 to against the US dollar, weighed down by foreign fund outflows and weak domestic equities. A record trade deficit for November, driven by higher gold imports, further pressured the rupee. Thirdly, foreign institutional investors sold equities worth 279 crore rupees on Monday, continuing their cautious stance. The lack of fresh FI buying contributed to weak sentiment, although mid-cap and small-cap stocks showed resilience. Additionally, large-cap stocks like Reliance Industries, Bharti Airtel, Nestle, Larsen & Toubro, Bajaj Finserv, HDFC Bank, JSW Steel, and Titan faced significant selling pressure. Lastly, speculation about a potential rate hike from the Bank of Japan, set to announce its policy decision on December 18th to 19th, has added to global market uncertainty. In terms of global market cues, Asian markets saw Seoul, Shanghai, and Hong Kong trading lower, while Tokyo was in positive territory. US markets ended mostly higher on Monday, offering mixed signals to global markets. For traders, immediate support for Nifty is at 24,200 to avoid further sell-off, while immediate resistance is at 24,500, with further resistance at 25,200. Traders can consider buying on dips near 24,200 with a stop loss at this critical support level. The Indian stock market is likely to remain volatile as investors await key global events like the Fed and BOJ decisions. A dovish tone from central banks could offer relief, while hawkish surprises may exacerbate the bearish trend.